Get started. All right, so today I want us to look at smart money. So it's a little bit of back testing I was doing here, but I'll just take a blank chart and then we'll look at it very quickly. Now, because we are back testing, I will do a great deal of replay. So let's just see how market moves and how price moves with the market. Okay, let's go to 1 hour chart. Oh, can you see my screen? Don't think you can see my screen. Okay, let me share my screen. Share screen. Okay. Okay. Can you see my screen? Patty says I can see you and also hear you. Okay, but can you see my screen? Uh, I need a confirmation. No feedback on that. Okay, you can see my screen, but not quite sharp. Okay, that's fine. I really wish I could turn on voice for you guys. Oh, let's see. Well, looks like I'm having some issues with that. Okay, so just drop your questions as they come, and then we'll see what we can do about that. Okay, so basically, I'm going to be taking you through the concept of smart money trading. Okay, you can see my screen, but not quite clear. Okay, not quite sharp. Okay, don't worry. When I expand it, you see better. Okay, so I'm going to be taking us through the concept of smart money trading. Now, what is smart money? Smart money is basically a trading strategy that comes with its own unique intricacies. Now, it's not enough to know how to trade Forex. You must also have a particular strategy with which you approach the market and with which you seek to trade. Okay, so I'll be going through smart money very briefly and very quickly, and then just showing you how the smart money concept works. Okay, so you know that it's actually easy to find and make this money trading the forex market. Okay, so since you can see my screen, I'll move to that screen real quick and then show you. Now I want to backtest, so I'll go all the way to let's see, as far back as, okay, let me just stop here. Let me take it to this point. 5th of November. Okay. Now let's walk through this real quick. Okay, so here we are. This is the market. This is Australian dollar, US dollar. And we were asking ourselves, where is the market likely to go? Is it going to go up? Is it going to go down? At this point, should we be buying or should we be selling? Okay. Any guess? Which way should we go with this market? Which way should we go? I want to see a comment. Let's see if there will be any good guess. Do we go bullish or do we go bearish? Anybody wants to try? Just a wild guess. A wild guess is fine. A wild guess is fine. Hmm. Okay. Let's see. Patrick says bearish. Okay. Uh, Matthew says bullish. Okay, so two sides of the coin. All right. Actually, the market will go bearish and it will go bullish. But the question is, which side will it go in first? Which direction will it go in first? Okay, so let's see. Now, applying the smart money concept, what do I see? Looking at the 1 hour chart, what can I see here? I can see, first thing I can spot is that there is liquidity above here. So I'll call this liquidity above. And then I'll call this a liquidity grab that comes to grab liquidity above. And I see this as an impulse that pushes away. I would want to see a break of structure here. So I want to see a break of minor structure here, which hasn't come yet. BMS bearish. So in my opinion, I would expect the market to come break below this level, pull back before I consider selling. Let's see. Okay, so it's coming to give me, okay, fine, it gives me the break. Okay, so it gives me the break. Now, what am I looking for now? I want market to pull back, and then I'll look for an entry. Okay, so I have a break. Most times I'll look for an imbalance, but when I don't find an imbalance, I'll still push. So what am I waiting for now? I want to see the market come back in this way, and then it gives me some sideways movement, then a drop down. Okay, let's see what happens next. Okay, okay, a little bit of a pullback. I want to see a better pullback, perhaps to this candle here. Okay, rejects around this level. I'm still not comfortable with that. Let's see, I want something higher. Okay, drops down further. Okay, see another push. I want to see the market come to about this level, then I'll look for a possibility of going down. Okay, it's not there yet. It goes a bit higher. Now, the interesting thing about trading is patience. Now, it comes to this candle here, candle of interest, which is this candle, okay? But I want to I want to see a little bit of rejection. So I'll go to a smaller time frame. Let's go 15 minutes. And what do I want to see on the 15 minutes? I want to see how the market will reject. And when I say rejection, I want to see some movement, then this, then this. Okay? All right, so let's see if we'll find that. Okay, we begin to see some slight rejection. Okay? What happens here? Okay, slowing down but not rejecting yet. Okay, this looks like it's beginning to reject. Okay, so what do we see here? When we come to the 15 minutes, we notice that there is a level of imbalance here. So I want to mark out 15% of that imbalance. 50% of the imbalance. That could have been a possible entry. If I was to enter off 15%, 50% rather, of that imbalance, that would have been an entry here. Stop loss just above this high here, above this high. And then I want to take profit all the way down here. Give me a beautiful 1-to-7 risk reward ratio. Let's see what happens with that trade. Okay, this has already given me a near 1-to-1. Let's see another push down. Okay, I think I have a 1-to-1 already. I already have a 1-to-1, but I want to go all the way down here. Okay, so let's see how it goes. At least I expect market to at least come to this level. Why? Because there's an imbalance and I expect the market to fill up. An imbalance needs to be filled up sooner or later. So I could as well say, okay, let me put my level here and go for a 1-to-3. But because I know that this has been a break and a pullback, in fact, sincerely, I expect market to target much lower levels. But let me just start from here. It's another imbalance here, which I expect market to come to that point also. Let's see. Another imbalance right here. Now, why is the market coming to these levels of imbalance? To fill them up. To fill them up. So let's watch how the market plays out. Begins to go down, a little bit of rejection around this level. Okay. What do I expect market to do? Maybe come back, fill this imbalance here, and then push back again. So expect to see something like this, maybe to this level, and then push back. Okay. Let's see what happens. Okay, pull back a little bit and okay, and goes all the way to stop us at happens. At least the market gave us this. It gave us a 1 to 2. Okay, so I'll take this way and I'll call that plus 2. Plus 2. So you could have made 2 times our risk on this trade before being stopped out. Okay, so now we have been stopped out. We ask ourselves, where is the market likely going to? We see a trend line here. What has the market done? It has grabbed liquidity above that trend line. So what will I expect market to do? Push aggressively down, pull back, and then go again. Okay. I hope you guys are still there, and I hope you are following me. Let's see. Okay. All right. So let's play price. What do I expect now? I see this as another level of a liquidity grab. Market has come to grab liquidity that lies above all of this trend line. Remember, this is a downtrend line. Retail is seeing resistance, 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 resistance. Okay, so market has come to break through that level, liquidity grab, and now it should push down. When it pushes down, I want to see possibly an imbalance, a break of structure, a pullback, and a re-entry. Okay, so let's go. Okay, so we begin to see a push away. Now, this we're stopped out here because we placed our stop loss just above this tip. Now, assuming we had placed our stop loss 5 pips above, let's see, let's just do it. Our price is 6523. So 5 pips above would have been 6528. So would we have been stopped out? Not exactly. Okay, so let's use the 5 pips because that's what I usually do. Usually place my stop loss 5 pips above the level. Okay, so let's see what happens. The market still comes to stop us out. Okay, still comes to stop us out. So that gives me a confirmation that this is a sort of bullish reversal. Okay, so you see, when you say price is going to go bullish or it's going to go bearish, you're never wrong. You're right in one way or the other. What is rather important is asking yourself, which direction is it going to go in first? Okay, so we have a +2 here. Looking for another opportunity to enter. Remember, you should never rush the market. Okay, so now the market is beginning to go bullish. So let's see what happens. Now, this was a liquidity grab, but we can also see it as a break of structure. This can now be a break of structure at this level. So we want to label that BMS bullish. Okay, now market does that, creates an imbalance here, another imbalance here. So we could watch out for this level, watch out, mark this imbalance, expect price to come and fill this imbalance, and we want to enter off 50% of the imbalance. Maybe not even enter, maybe even wait to see rejection around the imbalance. Okay, so let's see what happens. Okay, goes up, okay, comes up to 50% of that imbalance. We want to trade from this point, put our stop loss just below this red candle here. Now, where would be our target? Let's go to a larger time frame and see if we can find a level to target. Because this is current price level. Some levels of imbalance here, so we might expect to have all of these levels as a target. Let's just go for this high here. Okay, so that will give us a nice 1 to 8. Okay, so let's go back to the 15 minutes where we started off and see how price plays out. Okay. Okay, doesn't give us the rejection. Okay, nice rejection here. Looks like it was going against us, but you know what the market does? Keeps swinging. Okay, and there it goes. We are stopped out. So what do we have here? We have -1. -1. Okay. Okay, so market is beginning to go bearish now. It's challenging this level. we see a break below this level, we'll call it a break of structure, and then we'll look to go bearish. It breaks below. So what do we call that now? We call this now a break of structure to the downside. So this become a BMS bearish. So BMS bearish, what am I expecting to see from here? Market, while doing this, created an imbalance. Imbalance here, imbalance here. I want to see the market fill up this imbalance. And also fill up this imbalance. Okay, it's even done 50% of this already. Okay, so I want to see market pull back into this level from here right now, pull back into maybe this level, a little bit of rejection and go down, or possibly come to this level before it rejects and goes down. So let's see what happens. But I want to wait for rejection first before I look to trade. What happens nicely comes into this point and now go down to a smaller time frame of the 5 minutes. Okay. Now I'm on the 5 minutes. I want to see good rejection here before I place my trade. Rejection, in my opinion, would mean the market should reject. Oh, sorry. Market should come down and at least break this level, pull back, and then I enter. Okay, so let's see what happens. Do we get that rejection? It's coming for that level. Okay. And finally, we have a break of that level. I want to see market pull back somewhere around here, then I look to enter. This imbalance has been filled up, so we can actually do away with it. Okay. So this is our level to watch. Very tiny imbalance. In fact, there is no imbalance here. Let's see. There's no imbalance here. So I'll take this off. Okay, so at this point, what will I be watching out for? There's no imbalance, so I watch out for the bullish candle, and I want to go 50% of it. So I will wait for market to come to 50% of this point, and then I'll look to enter stop loss above these highs, target all the way down below. Okay. Doesn't take me in yet. I'll wait for it. Okay. Doesn't take me in. What does it do? Create another level of imbalance, and I want to mark that level. So you see, the beautiful thing about Forex, the thing about Forex is that many a times you would have setups and the market doesn't come to your setup. But what you should never do is that you should never force a trade. Okay, so here we are. Another level of imbalance. Market should come 50%, fill up, and then we go. Okay. Market doesn't come to our level. So we ask ourselves, where is the market possibly going to? We have this imbalance down here. Market is targeting that level. Okay, so we might want to see market come fill up 50% and then turn away. Okay, but while doing that, we want to find a way to catch this down move. No, we haven't caught this down move yet. We want to find a way to jump on that down move. But if the market gets to this point and pulls back, I would be a bit slow to go in bearish. Okay. Okay. So here we are. We've even had our entry here. 50% of this bullish candle. Okay, so we have this down move. This last leg of the down move originating from this bullish candle here. So we want to mark out 50% of that bullish candle. Okay, and wait for market to come to that point, and then we sell. Target being this level here. Though a very small one, but you can say it's worth the while. It's our entry, 50%. Stop loss just above this high. Target, let's go for balance below here. Okay, so let's see how that pans out. Okay, so the market triggers and takes us in at this point. We keep going, goes down a little bit, gives us a nice 1-to-1 already. Now, what do I like to do? Once the market gives me this is a 1-to-1.3. When the market gives me a 1-to-1, I like to partial and then lock in profit, so that I'm sure that I become risk-free on that trade. Okay, I go risk free on the trade. Uh, okay, are we still together? Are we still together? Okay, so let's just watch how price plays out. Okay, so it begins to drop down massively. Now remember that as the market breaks down, I'd always look for an opportunity for a re-entry. So my strategy is very simple. Look for the imbalance. 50% of the imbalance is my entry. So that's an imbalance. Another imbalance. Okay. Now, one thing you should always understand about forex trading is that you can never be right all the time. So that is why you must employ a risk management that is convenient. Do not risk too much of your account. And generally will risk half of your account. Why? So that when I have the losing trade, I lose just 1%. But if I win this trade all the way to the end, it's ratio 1 to 7. So I get a whooping 7% of my account on one single trade. Okay, so let's keep going. Okay, so what happens? Market comes to this point, 50% of the imbalance, and I'm triggered on my next trade. So second trade is open, entry at this point, stop loss just above this high, same target. So it gives me about a 1 to 6. So you see, an entry from this level gives me a 1 to 7 for this target. Entry at this level gives me a 1 to 6. Now it doesn't matter your entry and your target. What matters is your risk. Okay, how many pips you are risking, and what account size you are risking. Okay, let's keep going. Let's watch price breakdown. Okay, so we see how price melts down beautifully. This second trade has also given me already a 1 to 1. So what do I do at my target? My target is this imbalance down here on the 5-minute time frame. Now on the 5-minute time frame, and we are watching price play out beautifully. Okay, so price continues to melt. Okay, what happens? That was too quick. So what happens here? Oh dear. Remember, when I have an imbalance, I look for a setup. Okay, so here we are. Another imbalance here. So what do I do when I find an imbalance? I mark it out, and I look to enter off 50% of that imbalance. Okay, and boom, the next candle comes and takes me in. So entry at this level, stop loss above this high, bearish candle, and same target. But this time I'm getting about a 1 to 5, which is not bad. Okay, so this is a 1 to 7, 1 to 6, and now a 1 to 5. Let's see what happens. Okay. What happens? It has pushed down. Let's begin to tidy this up now. This is the first trade. This is the second trade. And now we are on the third trade. Now this is giving us a 1 to 7. It's giving us a 1 to 6. This is giving us a 1 to 5. Now I have another imbalance. Okay. So what do I want to do again? I want to mark out 50% of that imbalance and watch for price to come back to that level. Now remember, never forget, there are times when the market will come and take me in and take me straight to stop loss. It's not impossible. Okay. But if you just stick with your strategy, okay, beautiful. It takes me in. Another entry. So this is trade 4 on one single down move. Stop loss just above this high. Target all the way down here. Now this is a 1 to 3.97. Let's take it here. That'll give us a 1 to 4. Okay. So same targets, but now 4 trades. Remember, this 1, 2, and 3 are now risk free. Okay. Target is down here. Okay. Boom. Let's leave it above this high. Let's see if we're actually going to be stopped out. Okay. So we are stopped out on this trade. So this trade -1. So -1. -1. Okay. This trade. It has come so close to the stop loss of this second trade. Let's see what happens. Okay, it doesn't stop out. Okay, price continues to break down. So one losing trade, three trades are still active and they are all in the money. Now we have something looking like an imbalance, but we want to wait for it to be sure we have what we actually want. Imbalance has been filled up. We can actually delete it because it has been filled up. So I'll take it off. So let's see what happens. We need a third candle to have our imbalance confirmed. Okay, so we have our imbalance there, and we mark out our level, this point to this point, and 50% will be our entry, stop loss, just above this high, take profit all the way down, same target. Okay, let's see how that plays out. Now, there's also a possibility that market is looking to reverse here, but until we have a reversal, we do not want to jump before the gun. Okay, so looking like market is actually going to reverse. Okay, so let's see what happens. Okay, this looks like it has given us a one-to-one already. Let's see. Oh, not yet. Now, why are we watching out for a one-to-one? At the one-to-one, we want to go risk-free. Okay, so I think we have our one-to-one now. Not yet. Let's see. One-to-one will be here. Okay, so watch out for that level. Okay. Okay, so it stops us out. We do not get to even have 1% of the trade. So that's a losing trade for us. So second losing trade. And we can begin to call these other trades stop. Okay, so one losing trade, two losing trade. Okay. This one went 1-to-1. Okay, 1.75. This one went 1 to 2.81. Okay, 2.7. This one went all the way 1 to what level now? 1 to 4. Okay. Okay, so let's quantify our trades. On this trade here, what did we have? On this trade here, we had +4, +4. On this one, +2, +2. On this trade here, what did we have? +1. Okay. So we have okay. So how many trades so far? This one never got to our level, so we take this off. Let's see. We have one trade +2, one losing trade -1, that gives us 1. +4, that's 5. +2, that's 7. +1, that's 8. -1, that's 7. -1 again, that's 6. Now let's see how much of time we have spent. Entry at this point. So from here all the 17 hours, 35 minutes, we have already gotten 7% growth in account. Not bad. Not bad at all. It's what some people struggle to make in 1 month. Okay, so let's keep going. Let's keep going real quick and see how this pans out. Okay. Okay, so here we have the bullish push, which has broken structure. We want to see our imbalance. We have another candle, and now we have a confirmed imbalance. So we draw out our imbalance. Wait for market to come to 50% of this, and then we look to enter a trade. Okay, and there we have it, 50%, deep push. So we want to have our entry at this point, stop loss below this level. We had some levels up here that were not filled up. So we can look to target those levels. Okay, and even go further high. We had a level up here. That gave us a 1 to 13. So let's see how this plays out. There's also something looking like some equal lows here. So possibly the market might even drop down, grab those equal lows and push away. But we don't know yet. Let's see what happens. Okay. Okay, so market stops us out, grabs the equal lows below this level. Okay, just like I had said. Wait a marker. We have equal lows here. So come to template. Nope. Equal lows. So there we are with our equal lows. Just give me a minute. Okay, so this is a liquidity grab coming to grab equal lows. Now, what do I want to see next? So we have another -1. Let's not forget that. So that brings us back to 7. So let's write it here. Total equal to +7. So let's label this one -1. -1. So we are on 7 now. Okay, not bad. Okay, so we have a liquidity grab here that causes us to lose this position. Now we want to see a break above this structure and a possible entry. Okay, so imbalance filled up, we can actually delete you. All right, let's play price. Keeps dropping. What do I want to see? I want to see price break above this level and then come back here, break of this structure. Then I'll have a confirmation to trade from somewhere here and then go up. Right? I don't have the break yet. Okay. On the alternative, if market comes all the way down, now market has broken this level. Okay, so I could call this my liquidity grab, shrink this, and look at this as the imbalance that needs to be filled up. So market would either come to this level and go down, like it can, having broken above or below these levels, pulls back into this area, reject, and then go down, or markets come down this way, come break above this level, pull back, and then go up. For now, this is our break. Okay, this will be our liquidity grab. This was the trend line down here. This spike came to grab liquidity that lays all above here. It's gone down. This is our impulse breaking the structure level. And then what happens? Market should come back, fill up this level, respect this other block, and then drop down massively. Okay, let's see what happens. Okay, so it comes very close, but it doesn't go to 50% of that imbalance. But at least it touches the tip and drops down. Let's see what happens. Okay, so it breaks this level. Breaking that level creates another imbalance here. Okay, another imbalance here. We want to watch out for 50% of this level, stop loss above this high, and then it drop down. So let's see how it plays out. Market jumps out without us. We'll wait for it patiently. But while jumping, it comes back to feel some imbalance here. It's an imbalance here. It's another one here. The market came to nicely fill in this one. Stop loss above this high. And where will our target be? Market has filled up this one. Which other level of imbalance are we looking at now? There's an imbalance here, so we could target that level, go all the way down. Maybe even below these lows, go all the way down. So let's see what happens. Okay, so market comes to filling. Okay, this has been filling already as our entry. We'll watch out the market filling this, and then a possible re-entry also. Okay, it doesn't give us our entry. It doesn't feel that yet, but it'll come back sooner than later. Now, what do we see? We see an impulse here. Let's do this. Okay, so what do we see here? Let's take it back to this candle. I want to show something here. Okay. So we see this candle coming as an impulse, breaking this level, pulling back. Now there is no imbalance here. So what we can do is that we can watch out for 50% of that candle and let it be our entry. So 50% of this bullish candle, can be for us a marker, an entry marker. So here it's a possible level to enter the market. Stop loss below, above this high rather, having the same target. Now, the beautiful thing about waiting for a second entry is that while this one, same target gives us a 1 to 4, second one gives us a 1 to 10. Okay, so let's see how price plays out. It takes us in and begins to melt. A break below this level and we'll consider a re-entry. Okay, comes real close, not there yet. Okay, finally breaks below the level, and then we want to consider a re-entry. What's our re-entry strategy? Imbalance. Mark out the imbalance, wait for price to come back to it. So you see, while this trade is making us just a 1 to 4, this one will give us a 1 to 10. This one currently has done 1 to 2, whereas this one has given us 1 to 4. Okay. Okay, let's go. All right. Let's watch price melt. Okay, so price begins to reject around this level. The question now is what's going on there that is causing price to reject? We shrink and go into the chart. Okay, so what do we see? Market has come to this level here. It has filled up this imbalance and looks like it has taken out this level. So it's good enough reason to see a rejection for a bit and then a calm down. Okay, so let's see if we'll get that. Have a bullish pullback. Let's see if the market will continue bearish, or maybe to just come feel this, take us in, and then it goes back down. Okay, so let's see. Okay, has it taken us in? Not yet. Okay, not yet on our level. Let's see. Not yet. Okay, it gives us an entry here. So remember, 3 options. That the market would move without taking you in. Option 2, the market takes you in and takes you for profit. Option 3, takes you in and stops you out. Okay, so let's see how this pans out. Okay, let's see. I want it to drop. Okay, and there you go. So all of this was just what we call a consolidation. Okay, indecision in the market, trying to mop up some level of confirm the rejection before it drops down. Now, what do I have? We have a 1-to-1 already, so we're already risk free on this trade. Target is still down here, 1 to 4. 1 to 4. Okay, let's see what plays out. Now, there's an imbalance here, but I wouldn't look to trade it because it hasn't broken below this level. Okay, so let's just see how that goes. Shrink this a little bit of indecision here. Market has come to fill up this imbalance, and I expect market to drop. Okay. Okay, let's go to a larger time frame so it's faster. Okay. Okay, and eventually, okay, we're still in the trade. We're still in the trade. Okay, finally we are stopped out. We are stopped out, but the good news is before being stopped out, we got a 1-to-1, so we could have taken half of our trade and gone risk free on this trade. Okay, so that being stopped out, remember we still have 2 trades running here. Let's see if we get stopped out on those ones too. Our market will still melt down and take us in the direction we want to go. Okay, so watch what happens. So it stops us out and then continues going. So this is what we call a liquidity grab. Comes to grab our stop loss, okay? Because we were just too close to this point. Now, if it was real live market scenario, I would not place my stop loss this close. I've placed my stop loss 5 pips above. So I won't have been stopped out on this trade. But be that as it may, let's just leave it the way it is. I've already pitched it that way. So we have a break. This one breaks below this level. So we can call it our impulse and then a pullback. So we want to see some level of rejection here and a possible re-entry. Okay, I want to enter at this level. Stop loss above here. target the same level, 1 to 6. Okay. And I'm going risk free on the trade. I just want to see, okay, so it doesn't take us to our destination. And at this point, I want us to do a calculation, see how much we have made so far. Last time we checked, we were on 7, and I think that was, okay, we'll just do it again. Plus 2 minus 1, that is 1, plus 4, that's 5, plus 2, that's 7, plus 1, that's 8, minus 1, 7, minus 1, 6. So we are on 6. So total is plus 6. Okay, so let's see how much we made on this trade. This is a 1 to 4. This level here gave us a, even though the trade is still, let's see how far this trade will run. Just for being for inquisitivity, let's see how far it's going to run. It's going to give us a lower level. Okay, so it actually comes real close to that level I was targeting. I want you to touch that level and I'll be satisfied. Okay, fine. All right, so it's a great place to drop the cotton. So this gives us a beautiful 1 to 5. This gives us 1 to 10. This one was stopped out here. But if I had placed my stop loss like I usually would do, maybe 5 pips above, maybe above this high, but I've gotten perhaps a nice 1 to 3. Okay, stopped out here. So this will be 5 uh, plus 5. And this one plus 10. This one plus 3. And this one here minus 1. Okay, so 6 plus 5, that's 11, plus 10, that's 21, plus 3, that's 24, minus 1, that's 22. So total of 22. What is 22 here? 22 times my risk. So it therefore means that if I was risking 1% per trade, I'll be making 22% in profit, just following the market the way I've followed it now. The next question is, let's see how long all of this has taken from here all the way to this point. 2 days and 1 hour. Sorry, 2 days and 2 days and 45 minutes. Imagine being able to grow your account by 22% in 2 days. That's an average of let's say an average of 20, just to say 20% in 20% in 2 days, or 22% in 2 days. So 10 days, and we have 20 trading days in a month. That would mean you can possibly grow your account by, sorry, so 22% in 2 days. That would translate into okay, 20 trading days. That would be 22. That's an average of 11% per day. 11% per day, okay. 11% per day, 20 trading days. That is 11% times 20. That is equal to 220% in 20 days. Trading days in a month. 1 month. I mean, you're multiplying your account by 220% in 1 month. That's if you are risking, that's an average risk of average, sorry, average risk of 1% per trade. An average risk of 1% per trade Sorry, guys. I'm going to delete this. Okay. An average risk of 1% per trade. If we're using 1% per trade, just trading for about 2 days plus would have made 22% in 2 days. That translates in 20 days, an average of 11% per day times 20 days. That will give us a whooping 220% in 1 month. I don't think there's anything better than that. There is not much of things that are better than that. Okay, so this is all about the smart money concept. It's what we do. It's how I trade. It's the way I trade. And interestingly, I'm giving out a course in December. The smart money concept. This is what I'll be teaching you, not just working as quickly as I'm working, but I'm going to go into detail showing you how I find my trades, how I take each step, how I make my decisions, how I decide on what to do and what not to do. I'll also show you how I make my wins, and interestingly, how I also make my losing trades. You've seen how I lose trades also. So I'm not foolproof. I'm not invincible. I'm not Superman. Okay. The good news is, no matter how many losing trades you make, you definitely have enough winning trades to cover up for your bad days and your losing trades. So, guys, that's where we're going to draw the curtains on this session. Till we meet again, we're going to meet again on Sunday, same time, 8 p.m. I'm going to keep it in 1 hour. Regrettably, we started a little bit behind schedule today, and sincere apologies. But from next week, we're going to start on 8 on the dot, and we'll be sure to keep on doing the same thing. Now, the truth is, you can learn a whole lot from this. Just following these sessions, you can learn a whole lot. But you get to have more details when you jump on our sessions and the training session, which is coming up in December, and then you can get to learn a whole lot. So, guys, thank you for coming in. Thank you for spending 1 hour with me. I still remain your host, Fx Kalapanzy, and we're going to be doing the same thing next week without sparing our lives. Okay. At this juncture, I want to wish you a beautiful